Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 7th of June. Fed Chair Yellen, no hints of near-term hikes. Yesterday, Yellen's speech to the World Affairs Council of Philadelphia fell short of helping the wounded greenback to recover some of its NFP losses. The Fed chief maintained a balanced stance, reiterating that the Fed remains on track to gradually raise interest rates. She also highlighted the many risks facing the U.S. economy and acknowledged that Friday's jobs report was disappointing, but urged economists not to read too much into a single data point. The key takeaway for us is Yellen's shift in language on the subject of rate hikes. While she previously stated that a rate hike would probably be appropriate in the coming months, she refrained from repeating the same phrase yesterday and offered no guidance with regard to the timing of the next Fed funds increase. These comments reinforce our view that currently the market may be too optimistic about the prospect of a July action, given that the FOMC is unlikely to rush into the next hike without feeling confident that this setback in the labor market is indeed temporary. Already, the implicit market probability for a July rate hike declined to 25% following Yellen's comments from near 30% previously. We therefore expect that this probability could ease even further going into the next week's policy meeting, something that could keep the dollar under selling interest until then. Overnight, the Reserve Bank of Australia remained on hold, as was widely expected, but in a surprising move, officials did not reintroduce an easing bias in their meeting statement. Instead, they stated that the current stance of monetary policy is consistent with the nation's inflation rate returning to target, thereby lowering the likelihood for any near-term rate cuts. Aussie dollar surged on the decision and the bank's hints that it could remain on hold for some time. This, combined with the prospect of a weaker dollar in the following days, could keep the pair supported for a while. As for today, during the European day, Eurozone's final GDP for the first quarter is expected to confirm its preliminary estimate, and thus we don't expect any major reaction from the euro, unless we see a significant revision. From the US, we get the final labor cost index for the first quarter, but given that the final figure is expected to confirm the preliminary print and that these data are outdated, we don't expect any major market reaction from the dollar. In Canada, the IV PMI for May is due out, but no forecast is available. Given that the RBC manufacturing PMI for the same month remained more or less unchanged, the IV index could follow suit. We have only one ECB Governing Council member speaking today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.